Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan with the Rocks and Stocks News Show. And I've got Charles Funk on again to talk about his Heliostar. Why I'm a big fan of Heliostar is because I grew up in the 1990s in the mining business. And back then and in the 80s, a lot of companies that are today household names and majors, they started out with smaller operations and then they grew from there. They explored, they acquired other assets, and it was a real model for growth that kind of got lost to a degree in 2000 and beyond, because in the 2001 to 2011 bull market for gold and metals, the attitude of a lot of companies was bigger is better. And I'm still got my feet in the camp of let's see you get these things into production and grow the company from there. Now, what makes that a good strategy now is the elevated price of gold and silver. That really creates a sort of a perfect storm to grow a company that way. And that's exactly what Heliostar is doing. And they had some really important news out. So I wanted to talk to Charles. Charles, thank you very much.
Yeah, thanks for having me.
So, what do you think about my rundown there of strategy and how to grow a company?
It certainly fits with my philosophy, and I think you're right. I think historically, it has been those who have the highest free cash flow wins. Back to, if three members staked a vein and the first person to get into the paying ore bought out his neighbours and then grew from there, and then they bought the next vein and the next district. So I think throughout history, cash flow has been king in this industry. So we have we have a view that we just want to keep getting better and better projects. Um, we started out with an exploration project in Alaska that you know and we've talked about in the past, and the market just wasn't there for it. So we went and bought Anapola. We think Anapola is a very high quality project. We think it's going to produce with a significant margin. And then we had an incredible opportunity to buy the cash flow that came from the Colorado and San Augustine. So we think our pathway is increasing production um, with decreasing costs, which is exactly what you want to do. We've got some pretty lofty goals, but if we do what we say we're going to do, we should be, 150 to 200,000 ounce a year producer in 2028. We think we can get there with very little to no equity dilution, which hopefully separates us from a lot. And if we do that, that implies multiples of our share price because there's no producers at that scale, less than 100, 1.5 billion Canadian market cap. So this business strategy that are laid out is largely what we're following, using cash flow today to expand production and buy better projects or build better projects in our case because we have them in the portfolio.
Well, one of the skills that I've always watched for in companies that want to do that sort of buy and build is the timing and structuring good deals. And you guys, your timing was ideal. And the way the deal you did to get these mines in Mexico is very interesting. Why don't you tell us a little bit about that?
Yeah, with the timing, it turns out it's not just been good, it's been incredible. And you can't
Amazing.
always you can't claim credit for every part of that. What we did clearly see is, and we had a view that this industry, as we all know, is clearly cyclical. And if we use gold as the proxy, every sort of 5 to 7 years, it stepped up $200 to $500 in value, and it's done that consistently since I started my career in the early 2000s. And so you get these opportunities which we saw the last couple of years where gold was finally moving up from sort of 1800 gold. We didn't know it was going to go to 3400. That was well beyond what we were modeling. But the equities weren't responding. So We were paying what we were sort of look back equity prices for look forward commodity prices. And that struck us as a really good time to be active. We had a number of other advantages, particularly if you look at the acquisition of the entire Argonaut portfolio. We had the most, anti-mining president in Mexico's history at his peak of his anti-mining rhetoric in the run-up to the election. And you had equities on the nose, and you had a forced seller with Argonaut through their troubles with the Canadian asset, liquidating the whole company. So we had um, three sort of incredible events that come at once. And I'm actually working on some new slides for our presentation. We ended up buying Ana Paula for $10 million total. And 250 to 300 million is the consensus NAV from our analyst coverage for Ana Paula. Then we're able to buy all of the other assets in Argonaut for another $5 million. And that's got around a 300 million NAV. And I think that's going to materially grow as we put some more studies out shortly. So we've done some very clearly accretive deals.
And
We were aggressive when everyone else was cautious.
and you were able to get rid of commitments on debt. Tell us about that. That was really interesting.
Yeah, again, the further you look back on it, the harder it is to explain the circumstances and how loathed the like assets were at the time. So we'd paid 10 million upfront for Ana Paula, and we owed 20 million in milestone payments. Feasibility study, construction decision, commercial production. As part of the transaction, they were cancelled because we effectively owed them to ourselves. So we saved ourselves $20 million in dilution in Ana Paula and got two operating mines, which you look back today and anyone would bend over backwards for.
Absolutely. Well,
And it wasn't, this wasn't a mate's deal. It wasn't, these assets were available for anyone who wanted them for an extended period of time. And people saw assets that were tired, that were looking like they were coming to closure. When we bought the Colorado, it was in care and maintenance. It was just producing gold from the leach pads. Within a couple of months, or the month that the transaction closed, San Augustine did the same, stopped mining and went into, so they looked like closure liabilities. What we saw, we obviously had the competitive advantage that we cancelled 20 million in the payments on Ana Paula. But what we fundamentally saw was these assets actually were profitable, that they'd made money. There was no tax shelter when we bought them. It's not a turnaround story where you had to fix something. They were
right.
actually profitable. They just needed investment. And so we started with La Colorada, and the transformation of La Colorado has been quite stunning, I think. It's gone from a mine going into shutdown to we restarted production at the beginning of this year. We put out a study in January after we drilled, over 16,000 meters of drilling that shows a 6.5 year mine life. We're about to update the economics on that very shortly, and I think we'll show even better economics. And then, fortuitously, with the gold price moving as far as it has, waste material. This blows my mind when I think about this. So in El Dorado, the multi-billion dollar gold company, this was one of their first two mines. They were mining this in the mid 90s. And so they mined about a 0.8, 1 gram cutoff grade, somewhere around that number. And so all the waste just got sat on the edge of the pit as waste. And they processed the gold and did well and helped build El Dorado. Today, we're mining that waste. It's 0.2 grams per ton, but you don't have to pay to blast it and move it out of a pit. It's just sitting there about a kilometre from the crusher. I think we're going to make more money per ton on the waste, just on a straight valuation perspective, than the 90s because of how far the gold price has moved. It's a
Wow.
really interesting insight into, gold was $250 an ounce when they were mining this. And so it's over an order of magnitude bigger. But you could never imagine, I couldn't imagine the stuff today that we're moving as waste, that someone's going to come back in 20 or 30 years and go, those idiots, look what they left behind. The speed at which the gold price has moved has really de-risked our approach and opened up opportunities. So we've got these stockpiles where I think we'll have, at the moment we've got 20,000 ounces in reserve. I think we can probably grow that to about 50,000 just in stockpile and then go and expand those pits. So for not a lot of time, and just for the benefit of focus, we've fundamentally turned La Colorado around. I think it's got a mine life beyond what we're put out as well. It's got underground potential. It's got exploration potential. I wouldn't be surprised if we see La Colorado operating for another decade. And
Wow.
so we hadn't put any attention and focus on San Augustine
Just
because
before, I'll interrupt you for a minute there. You're touching on something that I don't think a lot of people really realize is that if you look at just on the price of gold alone on a per gram basis, what was waste in this case is now profitable, and the opportunities out there for projects that when it was like 20 bucks a gram for gold compared to now that it's worth 110 bucks or something like that per gram, it really changes the opportunity for a lot of projects and the industry in general. I just wanted to touch on that before we move into
I
the
think
good news on
you
San Augustine.
I think you're right. I think there's a great business model right now of running around privately in the Western US and in Mexico and just reprocessing any leach pad that was put there in the 90s. My instincts is that could be a very profitable private business. It's not the scale that we want to operate at, but I wouldn't be surprised if we start seeing a lot of those stories where people are generating tens, up to 100 million bucks over a few years in the right stockpiles because today you're seeing operating heap leach mines in the US operating at zero point 0.2, zero point 0.3 grams per ton oxide gold. That
Wow.
is the average grade of the waste of a lot of old gold mines that operated in the 90s.
Wow. And another people don't real investors don't really adjust to the numbers as quickly as they should. For example, 40,000 ounces of gold production back when gold was worth 200, 300, even 1,000, whatever, was not that significant. But now, 40,000 ounces, if you're making good money off of that, let's say you're processing it at 20 bucks a gram and you're selling it at $80 a gram of profit. Well, 80 times 40,000, that's a lot of money for a junior gold miner.
It's yeah. In fact, I'm working on some updated slides and showing the margin history at La Colorada, and you can see it's sat since about 2014 at between 200 and $400, which sort of fits all our knowledge. When gold was at $1,800, it was costing about 1,200 to produce. What you're seeing in the last couple of years is incredible margin expansion that probably won't sustain if history is a guide. But in the period of time that you're in it, it's incredible to build a business. I don't think, and I tell people, I don't think you should be buying Heliostar for a 30 to 40,000 ounces of gold production this year.
Right.
Why the 30 to 40,000 ounces matter is because it helps us build the team and protect the share structure. Why we get to that, hundreds of thousands, ultimately 500,000 ounce a year production that we want to achieve as a company. So, from our perspective, it's expertise and knowledge, which is underrated. There's no substitute for doing and learning how to do it. Secondarily, it's this cash generation, as you touched on, is a real advantage for us as we build the business. If we just had Anapola, to take that as an example, it's now 12 months along the line, but we were going to do a bulk sample at Anapola before we had any operating assets. And the read-through cost of capital was about 24%. We're effectively giving up the economics on 12,000 ounces to do it, was what we would have done. We had a letter of intent in place that was public. Once we bought the assets, and we paid 5 million with debt, and we had a $5 million working cap facility, we've since paid that debt off. That worked out just over 12%. So the advantage of being an operator was your cost of capital halved. So if you have lower cost of capital, more importantly, if you have free cash flow, you've just got a natural advantage in growing your business in any point in the cycle.
Right. And recently, Charles, I did a study and I did my homework and I compared projects on a 100,000 ounce basis of production. And I looked at the valuations relative to that 100,000 ounces of production. Comes out to about 800 million to a couple billion. And so if you're talking about a couple 100,000 ounces of production by 2028, my way of looking at that is, that could be anywhere from a 1.6 to a $4 billion valuation. And that's really what, you're setting the foundation towards moving towards something like that. I don't know what it'll be
Oh,
when.
that's the cool thing about it. You know what we're worth by looking at those comparables of what that is, and you're spot on. I can't find a company doing under 150,000 ounces. I should look at it again recently, but I think with the way the market's moving, it'll only further reinforce this point. Under 1.5 billion Canadian. The
Right.
challenge is every non-producer company trying to get there
So
is
that
how do you
gets
get there without
to
issuing so many shares that you can't see the reward? That's what we think separates us. Um, for example, this permit at San Augustine will give us an extra 40 million of cash flow, mostly next year on at a $3,000 gold price. That's a significant amount of
what is
asset
the
level free cash flow for us.
what is the free cash flow on that?
So that is the free cash flow.
Also, it's not cash flow, it's free cash flow.
No, the
It's
cash flow, I
not
haven't got the number off
revenue.
the top of my head, but it's well over double that.
Holy moly. Wow, that's huge. I mean, what's your valuation right now?
So we're just over 300 million Canadian market cap, around 250 million US. So you could almost argue you're getting most of the Colorado and Anapola for free in that circumstance.
Wow. And if you put a reasonable multiple on that earnings,
That's
um,
my point. If you put a 5 or 6x there, so and I think that's the cool thing about what you're describing is it's not like we're just going to go flat and all of a sudden we're valued at this. It
right,
comes on de-risking steps, on certainty of production, certainty of margin, certain permits, certain studies that lay it out for the market. And so we've got a number of those. So we've just got the certainty now and the commitment to restart San Augustine. So that takes a huge risk out. San Augustine goes from a potential cost next year to a significant cash generator for us as a company. We're about to put the updated study out for La Colorada, showing the cash flow that we can do there. We've got to drill the El Dorado stockpile at La Colorada. That's the last remaining variable to know the grade of that. And we can have comfort in it. I think we'll be somewhere north of 50,000 ounces of production next year as a company. And so as we put the FS for Anapola, as we show the funding for Anapola, as we modify the permit from open to pit to underground, I don't think you just sort of go from here and all of a sudden you wake up at
right,
1.5, 2 billion. Hopefully,
exactly,
each one of these steps is 100 million market cap steps along the way.
or
And we're
more.
working very hard to do that with very little share dilution.
That's really impressive. I mean, like you said, you're kind of building the foundation and you're kind of building up the foundation as you're going along. And the prize out there at 2008 or so, or 2028, is quite exceptional. So yeah, I mean, this deal at San Augustine is this permit. A lot of people were worried about permits in Mexico. This was sort of updated permit. How do you explain this permit?
Yeah, correct.
You're not like
You
asking
know
for,
Mexico well, and Mexico permitting's nuanced. Typically most companies need an environmental impact assessment and a change of use of soils, an ability to clear the land, and the actual fundamental mining permit. We needed that sort of soils one. We wanted to expand an existing open pit. So in some ways, this is probably an easier permit to issue
right.
than some of
It's
the
not
others.
like you're starting a brand new pit.
No, no, we've
Right.
got a very interesting story at San Augustine. It's an L-shaped pit, which is not a natural, like a geologically natural shape, or an engineeringly natural shape. It happened because the previous operator didn't have a surface rights access.
Right.
They got that in 2022, but by then you had the AMLO presidency freezing the process, and they weren't able to get that. So we submitted an updated application in Q4. We followed the guidelines, we followed the response and requests. I'm very pleased to have met all those requirements. So I couldn't speak more highly of the permitting authorities that we've dealt with, both at the Durango level and the federal level. They've done what they said they would do. We've done what we said we would do. And all you ask for in business and life is certainty, and particularly it's all you ask for from politicians. I was joking that maybe the Canadian and American politicians could take a leaf out of this book, but at the end of the day, every circumstance is different. But I'm quite pleased and can report favourably about our engagement with the authorities and the steps that they've asked us to go through and that we've gone through.
Yeah, well, I live in Mexico and I live in the state of Zacatecas, which is a very, it's actually sits real close to Durango. And, this whole region is all about mining. And, Scheinbaum said what she said that, if you've got support of the locals, you do things the right way on environmental and water, that, this is going to happen. And, in your case, was it sort of an amendment to a permit, or it wasn't
Yes,
a
it was.
new,
It was an amendment, precisely. You treat it as an amendment to expand the open pit.
right? And
We also have a variance as well to lift the leach pad. We were going to have to spend 5 million in capital to expand the leach pad to the side an already permitted area. But we worked out that we would rather do a variance and get an 11-meter lift on the leach pad, and we've received that as well. So you're right in terms of what you talk about in the bigger picture. We're the largest local employer. The job certainty that this provides. People can make plans now for the next 18 months and slightly longer, knowing that there's the certainty and security of those jobs, of the taxes that we pay at a state level, of the community contributions that we make. For example, we're helping fund a water bore right now on a town right next to us. Those kind of sort of legacy investments in our local community can continue to be made. And then it has another flow through effect for us. It's giving us the confidence to invest in that asset for the first time. Now we know that we can turn resources into production ounces. And so for the first time, we're going to be looking to see what we can do to grow that mine life. There's some interesting oxide results around the pit that we want to follow up on. We're going to take some shots at some bigger picture sulfide targets. So, the benefits sort of like layer upon each other, because for the first time in our company's history, we're going to significantly invest in Durango on the back of this confidence.
I know what the image of Mexico is outside of Mexico, but I live in Mexico and I'm a mining guy. And, I've always said I was not worried about all the rhetoric, the political, and what was being communicated outside of Mexico. Because here I see what happens for mining. Like I live in a gated community in Zacatecas. I see the Camino Rojo trucks. I see the Mexican people. I see that they can buy a house, that they can employ an accountant, that they have to go to lawyers, that they, shop at the grocery store. And I know how important mining is. And that's ultimately why I had no worries but she wants guidelines. She wants to do things a certain way. And there's nothing wrong with that. If you follow the rules, you're gonna advance, which is what you're seeing as of yesterday.
Yeah, I'd go further in that you want those environmental standards. Mexican mining is one of the most professional industries in the world. Significant expertise. I think as important to us as the assets is the team that we've built, both ourselves as Heliostar, in which we acquired through the Argonaut acquisition. Um, I think expertise, consistency, certainty of supply and products and knowledge. Mexico is one of the great mining jurisdictions in the world. I have a view that every mining jurisdiction in the world is getting worse. You just want to be in the ones getting worse the slowest. And they all take turns in making poor economic decisions. And right now, you see everyone, it's still, more broadly speaking, Mexico is still a left-leaning government.
Yes.
Its
Yeah.
supporter base is sort of populist and hints of socialist. So you've got to be careful managing your
But
economy
that's
as a
on a
politician, but also meeting your public's expectations. So anytime you see businesses able to operate without the big headlines, I think that's beneficial for everyone.
But that's on a national level. And, economics have a way of fixing a lot of things. And, when you look at mining here in Mexico, like I have friends that are Mexicans that work in the business, right? And you hear about the stories of, for example, one lady I know works for Pan American Silver and I think it's PAAS now or whatever they're called now. And she talks about how her job is to go to the locals and teach them how to farm so that they have they're growing their own food. And when they talk about this stuff, Charles, it's like you can feel it in their heart, in their corazon, that that it just spans out in such in economics terms, they call it velocity of money. In this case, it's velocity of goodwill, if you will. But on a local level, especially in jurisdictions that have had mining for hundreds, 500 years, Durango, 500 years of mining in Durango, they know what butters the bread, as they say.
Yeah. I grew up farming as well. I grew up in rural Australia in very small towns, and it's sort of a double-edged sword. There's something incredible about that kind of from a per square meter or per hectare basis. There's no other industry that's as valuable as resource extraction. If
Oh.
you look back on a bigger picture scale, mines have very small footprints, open pit mines,
You
despite
know,
the views.
Charles, that's a great point because I've driven from Zacatecas all the way through Zacatecas, through Fresnillo, into Durango, beyond Sonoma and everything. And there's mines, oh, some people call it the Golden Highway. There's mines everywhere along there. But you drive and you can't see nothing. Yeah,
Yeah,
you see odd here and there, but really compared to how much mining, it's nothing.
correct. And while they're in operation before they're rehabilitated, they stand out, but they're very environmentally benign footprints.
Yep,
So you look at that, and the benefit of that is communities, states see huge revenue. You can't move that. You can't move a deposit like you can move a factory or you can move
right.
a financial services arm. So you have to be able to operate in that community. You have to have the support and goodwill. And that comes with huge opportunities. We would hope that when we're finished operating these assets, that we've left an education base that wasn't there before, that you've left infrastructure and sustainable or job opportunities that weren't there before. But the flip side is, when something comes in that does provide a lot of cash flow, then there's also huge expectations, and some of those unreasonable expectations. And so you're always trying to balance what you can do that is right and fair, because all what we do in mining is always orders of magnitude bigger than what you can do in farming or local community
Right.
business. But it
Exactly.
doesn't mean that it's necessarily, sometimes it just means you lose money faster. You're not always making money. So it's interesting to be such a significant employer locally as mines always are. It comes with significant responsibilities. I don't say companies always get it right. I wouldn't say we always get it right, but it's interesting being able to build the culture of Heliostar because we get to control that narrative. And the COO, our COO, Greg Bush, also comes from farming, ranching background. I think it gives you a unique perspective when you've come from rural communities to build a mine that works in rural communities. So hopefully, when we're completed mining, and hopefully that's decades away in the future. I've said before that we leave behind a legacy of an improved standard of living and a community that we're proud to go back to, where we can hold our head up high and say we did the very best that we could as the operators of these assets.
So let's talk about San Augustine. You talked about an L-shaped guess this would be it, pit. And you talk about a corner. And is that the inside corner or the outside corner of the L shape?
So the outside got mined, leaving a corner. And if you go to our website or look at the presentation, hopefully you'll see it clearly. Um, And so now we're able to lay that pit back and sort of round out that corner, and take the 68,000 ounces in reserve right now. We'll recover 45,000 of those. And we've got reason for believe there might be some more beyond that, which we look forward to drilling. Um, it's been known about for a number of years. It's purely been permissions based to get access to it.
Okay. Now, for my audience that doesn't know of Charles, Charles is a very talented exploration geologist. You will know about my audience will know about one of my top picks, which is Vizsla Silver. And Charles, he's got a big smile on his face because he was, and I think you're still an advisor there, aren't you, Charles? So he was part of the team that made some of the discoveries that are now leading to Vizsla being a very big success. So Charles is a very talented exploration guy. And that also excites me, Charles, because when you take a project from somebody else, a lot of times in my career, I've seen some people that are very talented at taking a project like that and making it bigger. And the way you make it bigger and better is through exploration. And so this is a common theme amongst all of your projects, right? Including San
It's
Augustine.
it Yeah, I think it's unique to this business in that you're depleting your resource base. And so if you're not growing it, you're dying. In the bigger picture, I have a view that companies grow, stagnate, and die. They grow when there's a risk on phase for, I think the best you might be able to achieve is a couple of decades, where you've got real sort of maverick leadership who's prepared to take outsized risks. And then slowly you fill your board with bankers and lawyers and more conservative approach because you have to deliver on these projects. So it's a natural growth. It's not. It shouldn't be a surprise that this happens. And so then you
To a
get a
degree.
collect.
I don't think you ever want to get rid of the rock guys and leave it all to the bankers and
But
the
I think if you look at the major mining companies in the world, very few of them have those kind of risk takers. And it's not just the rock guys, it's people who are prepared to take on jurisdictions, it's people who are prepared to solve social problems,
right.
who can create those huge upside opportunities. And
Like the
typically,
Lundins, for example.
so there is some notable exceptions. There's bigger companies that have, I worked for Newcrest that had that DNA. I think Rio Tinto, you could argue, has that DNA. There's companies around that have fought that consciously. I think, maybe B2 is going through that change from maverick growth company to stable. And once you cross that sort of flatline curve, in my view, you only last as long as the reserves in your assets. And in some cases, they're generational. So you can last, 50, 100 years on them. In other cases, you last 4 or 5.
Right.
Um, so it takes a particular growth mindset to approach these assets. And then there has been a clear business model pursued by companies like Argonaut, I'd argue maybe classically like Barrick in the past, where you bought and you built. And that's definitely what happened, how the way Argonaut grew the portfolio that we've acquired. And that meant instead of investing around their assets to a significant degree, they would go and buy and build a new mine, which has worked. It's a legitimate business model. My view is maximize the value of the ounces around your head frames. It comes from the companies that I work for. I think most of the senior management in Heliostar fundamentally agree with that approach. And so one of the biggest surprises has been that on one hand, it's really clear at assets like La Colorada, open resources that just haven't been drilled off. In other circumstances, that gold price fundamentally changes things as well. So we've got two tailwinds. One is a philosophical approach. The other is just the rock's fundamentally more valuable, so therefore lower grade is more interesting. That have opened up a lot of doors. So there's a nice graphic in the San Augustine press release showing the oxide targets that we plan to step out and hit. I don't think there's necessarily the same potential as La Colorada, but we think there's good potential for some expansion. So I don't want to overpromise what that could look like. So the oxide expansion is pretty easy. It's just step out. It's a volume game. Drill enough holes in enough area to work out where there's potential. There's a
But
really
there's the
more
sulfide element below that.
well, that's what's more interesting. If you go to straight endowment, there's probably somewhere in the order of 5 million ounces gold equivalent underneath in the sulfides, held up in gold, silver, lead, and zinc. But before you get too carried away, it's a big number. It's a lot of gold ounces. They're not amenable to the heap leach that we have, and
Okay.
they're also don't look like they're high enough grade to economically recover. So or at least at these gold prices. Again, this might be something when the gold price goes higher. But what we did was we systematically went through and we relogged section after section through the deposit. We collected a lot of multi-element data that hadn't been collected before. And I think we now have the most comprehensive geological model that anyone's had for San Augustine. And so what we think it is there's a significant intermediate sulfidation vein system
Okay.
that's gold and silver rich, that's sitting above and off to the side of a driving center. It's got significant number of breccias in it, which have a clear analog to the Penasquito system. I'm not saying it's Penasquito, but geologically, it's certainly the same type of system in the same age of deposition. There's a number of deposits, sort of from Metates in the west, San Augustine, Penasquito to Camino Rojo that you referenced, that are all sort of similar Eocene age intrusive systems. And so we've seen the evidence. If you do the evidence, and again, we put it in the press release for those who are geologically inclined. You're talking about gold, silver, copper, moly in soils over 4 by 4 kilometers. Like it's a very, very big footprint. And when you go and look for the colder elements, the ones that are more likely to have gone further out, and then the hotter elements, the ones that don't move as fast, so they're closer to the source, it's all driving us to the northwest of the pit. And there's some really interesting geophysics to support that. So we're going to take some shots on some sulfide targets. To be clear, these are exploration shots. We need to find higher grade. We know from the likes of Penasquito and Camino Rojo that you can generate higher grade in these systems. So we're going to do what we like to do, take some geology shots. I have a long held thesis that if you take risks in good districts, you'll get rewarded. And if you take risks in poor districts, you get let down.
Absolutely. And you
And,
know,
and my,
that's
my view my view for that is the good districts are just swimming in metal. The fluids have gold or silver or copper or whatever everywhere. So every excuse to create a trap, a spot to deposit that metal works. Every single one does. Whereas when you go to the districts that aren't as well endowed, you create all these great setups, but there's just not enough gold. And so you often get your heart ripped out. So it's kind of fun to be exploring in the Ana Paulas and San Augustines of the world, having done a lot of greenfield exploration in the past, because I think you're more likely to have success if you can find the right trap site because you know it's drowning in gold and silver fluids.
And it wasn't lost on me, certainly, Charles, that you mentioned Penasquito and Camino Rojo, not just because they're in the state that I live in, but the transition that they're both going through from the oxides into the sulfides. If you can do it in Zacatecas, I'm sure you can mine it in at the right grade in Durango. And so that stood out to me like a sore thumb.
Yeah, I think from my view, very clearly they're exploration targets. I don't want people to start baking in a huge sulfide deposit. We like to do good growth exploration. If you look at what we've done over the last 12 months, we've maximized production and got that working as well as we can. Then we've immediately focused on resource growth. We've done that at La Colorada. We're about to do that with the oxides to see what kind of mine life extension is possible. And then we'll take shots now at La Colorada. It's the underground, it's the regional targets. At San Augustine, it's the sulfides. And at Ana Paula, we got 15,000 meters converting the inferred resource. We're also in the background doing soils prospecting geophysics. We're also doing the first exploration. So we like to move all the board pieces down the board at a sort of an even rate. And fortunately for us, we're big enough as a company, which is one of the things I love about the growth that we've had, We're going to drill more meters as a company this year than I think we've drilled in the 5 years total beforehand.
Wow.
And that's because we're profitable and we can invest and reinvest in our future. So things can accelerate in a way that they couldn't before, because we're cash flow positive, and hopefully we've got the technical expertise to maximize the chance of success.
Well, evidence of that is in your Ana Paula project. You know, that was looked at as an open pit target. And you guys noticed that there was a high grade core, and you focused on transitioning that from a open pit type target to a underground operation. And boy, have you guys delivered with the truth machine there. I can't remember some of the recent numbers, but really nice, high grade, thick intersections. That project just keeps getting better and better.
Yeah, I think our last intercept was nearly 90 meters at 16 grams gold. It's capable of some incredible gold intercepts. You're right. We think that as a team, we have the strength of our convictions technically. Whether it's myself on the strategy, exploration, growth side, whether it's Sam Anderson, our VP projects on the studies, resource growth side, whether it's Greg Bush having built multiple mines, operated multiple mines. The team has the capability to make, I would argue, unpopular decisions. And when we were putting these assets together, you could have bought Heliostar at a 30 million market cap last year. We had the strength of our convictions to go where people weren't, and we backed ourselves. So I think we'll continue to grow like that. Hopefully one day people don't take a brickbat to us every time we do a transaction, or take an asset in a certain direction, and we start to get some trust on our approach. But that's up to us to continue to deliver to achieve that. But hopefully what we want to separate ourselves is technically we're seen as a competent group, who finds value where other people didn't. And then, it's our team's job to deliver, and it's my job to explain that clearly going forward. But we've very much enjoyed finding these opportunities. And maybe even more satisfying is delivering them. You always got to take a risk when you make a promise about what you think company could be, or even if you think, it's an implied promise a lot of time, and people start to attribute a bit of value to it. It's been a wonderful journey for us over the last 2 years as we've been able to deliver, and we'll try very hard to maintain that.
Well, I like your rebellious nature because I know that things change in the mining business. Years ago, I spent a lot of my career in diamond exploration, and back in 2001, I was part of a co-author of a peer-reviewed paper on unique diamond indicator minerals, and the importance in exploration. And the people then, we called them the Diamond Mafia, they thought we were crazy. Fast forward 20 years from now, and guess who was calling us crazy is now writing papers about unique diamond indicator minerals and their importance in exploration. So, I have personal experience with the value of being rebellious to a degree, especially if you can have the truth machine sort of back up your rebellion.
Oh, and it's always easier to do that when you're starting as well. Of course, if you ask me where I'd love, of course, I'd love to go to the Carlin Trend and pick up, and 10, 15 million ounce deposits in Nevada. But we can't compete in that space, where we started out as the upstart company taking risks that people thought, they're interesting risks. Now we're starting to stabilize into a producer with some level of maturity, and it's up to us to grow. So a bit like that cycle that I was talking about before. So from our perspective, we had to go outside. We didn't have, a
Outside the
reputation as,
box.
as mine producers. So, we know Mexico very well. Mexico's been incredibly good to me personally. I really enjoy working in the country. Anything in North and South America fits for us from a time zone perspective. We wanted quality resources that had been overlooked, and we wanted assets that had upside. And that's what we've targeted, and that's what we've found to date. You've either got to be creative on the deal terms or creative on the structuring of a deal for it to make sense. And so far, we've been able to achieve that, and hopefully that becomes something we're known for.
Well, Charles, I like seeing young guys like you in this business that don't have as many gray hairs as me. And what I notice about you is a characteristic that I've had the great pleasure to have interviewed a lot of very successful people in this business over my last 20 years as being a market commentator. And you have a lot of those characteristics. You're not just talented with the drilling and the exploration, but you got a very good mind for the business and for business in general. And I think some of that probably has to do with you coming from the farms, because I'm a farm kid at heart as well. I grew up on a racehorse farm near Vancouver, and so I know that kind of thought process of a farm kid. And you really got a great mind for the business, Charles, and that's in short supply these days. So having that combination of skills as well as with the rest of your team, I think is doing very well for Heliostar and will continue to help you guys grow into the future.
No, I think it's in they're kind words. I think the truth of it is, we might look young and hip in certain aspects, but I think there's kind of a cynical experience trait. There's a lot of deep experience in the team. Um, we are going to be aggressive. We're consciously choosing to be aggressive. We want to take risks in building the company, but we've also built a team and are led by some very experienced operators. If I told you I was operating these mines, you should sell your stock tomorrow. It's what it's what Greg and Mike and the GMs are doing that I think really is where the value creation is in Heliostar. I've learned a lot from our operating teams, and I think it's that combination of experience and enthusiasm that we're trying to use to build Heliostar.
I'm curious, you started more on the exploration side, and now you're getting a lot of experience on the production side, and you've got good advisors there. Has that changed your sort of methods of exploration, if you will?
That's a really interesting question. So I cut my teeth in big companies in Australia, Oxiana, Oz Minerals that BHP bought, and then Newcrest that Newmont bought. Did a lot of BD as well as exploration. So I'd seen a lot of assets and I'd done a lot of advanced stuff as well as the exploration. You're lucky enough to make a couple of discoveries and then your brand goes all the way down one end. But I do love the growth side of the business, whether that comes from transactions or whether that comes from exploration. But I think yeah, the biggest lesson when you start out there, I think there's two big lessons that I've learned. When you start out with majors, size matters. We used to run around the world with Newcrest, and if it was less than 1 million ounces, we could turn our nose up. It's very easy, very comforting to say that. Like it just, 90% of the world just disappears. And then you leave the comfort of the big companies, and then the instruction is to just make money. And so then you look at all these other opportunities, but eventually you do come back to that scale, come back to these big districts because that's where you're more likely to find big deposits. So, hunt where big deposits are is been reinforced on that journey. But the other one that this transition has really taught me is it's a capital intensive business. And so you routinely and at all points in the cycle, most points in the cycle, you find underinvested assets where there's a huge amount of sunk capital. So take La Colorada, for example. I probably know of a dozen exploration projects in Sonora that have similar upside potential to La Colorada that are all good. But if I find something at La Colorada or the team there finds something at La Colorada, it
Sure.
can be in a mill in 6 or 12 months.
Right.
So do the same exploration that you were doing in those earlier stage greenfields environments, but do it with an asset that has value, with an accelerated path to production. And then the talk on that discovery is massive. So the lesson I've probably learned is the opportunity to apply the same skill set that I was applying for bigger companies or juniors in Vancouver on true exploration, but do it where the leverage is incredible. And I think those opportunities will exist at nearly all points in the cycle.
I gotcha. Good. Well, that's interesting, and I'm glad you gave us some insights there. I'm going to give you some insights, Charles, based on my 32 years in the business. And that is, I think something very different has happening with the price of gold and silver that, especially with gold. We went off the gold standard in 1971, and it took 50 years for the politicians and the central bankers to break the fiat currency and debt system. 50 years. And I think that the way to fix it is to go back to the gold standard. So what took 50 years to break is not going to be fixed in a few years, in a handful of years, in even a decade or two. It's going to take a long time. And in that environment, I think we're going to see gold a lot higher. And silver is a monetary metal as well as look at all, solar panels, and I see them everywhere here in Mexico. The sun's out all the time. It's a wonderful source of energy. And you need a lot of silver so there's fundamental changes that I don't think you can just look at past cycles. You have to look at uh, past short-term cycles. I think you also have to look at big waves that are happening. And I see
Yeah,
a
I think you got.
big,
I think the analogs for this cycle are the 1970s and the 1920s. I think it's an interesting as you run a producer. Gold fundamentally goes up as a response to inflation. It's more about it's like a share count in a junior. It's more about issuing more dollars than it is gold. And so it's interesting. You get all this criticism for your costs going up. Your costs are going up because of inflation. That's why gold price is going up in the first place. So I think
as
we
long
almost
as it
fixate.
goes up faster.
That's the point, and it does that in small. Like this might be a unique time in history, as you described, for that, and where, but naturally, it's going to be hard to maintain those cost profiles whilst gold's moving this far because gold's telling you that inflation is a significant problem, and then. The only fundamental way in this industry, I think, to keep your costs low is to build new mines. And that's historically, the early parts of mine lives is always the lowest cost parts of the mine life, but that's getting harder and harder to do. So I think you are going to see, clearly there's a lot of support for the gold price. I think you are going to see costs continue to go up because it's hard to bring on new production, even if you wanted to. That historic lever of building more mines, like, Teck proudly built 5 or 7 mines in 5 or 7 years or something. I don't think that's possible today.
No.
And so that's going to put a lot of pressure on
Agnico Eagle,
margin.
the same 5 mines they were building simultaneously at one time.
No, I don't think that's possible in the modern environment, which speaks to pressure on both, your cost, but also pressure on the commodity price. It's no, we live in interesting times and we aspire at Heliostar to produce the gold to meet that demand.
Well, keep working on building the company from a corporate sense of buying and building or enhancing what you buy with the truth machine. And I think you guys have a very bright future, Charles.
No, thank you very much, Alan. I look forward to staying in touch.
And congratulations on this recent important development for the company with San Augustine.
Yeah, it's a very significant milestone for us, and as we talked about, it de-risks us significantly from a near-term cash flow perspective.
Before I let you go, why don't you give us a quick rundown on Catalyst coming up?
Yeah, so I think we're really well placed from a catalyst perspective. The way I look at our news flow is at 3 levels. There's the quarterly production figures, and we'll have Q2 coming out later in August. That demonstrates the ability to generate cash flow. The middle couple of quarters this year are slightly weaker than the first and last quarter for obvious reasons with the restart of San Augustine. So demonstrating free cash flow growth, demonstrating stability in the business. Then we've got what I think are these large growth steps, for the analyst NAV growth steps, where we've got the technical report coming out shortly from the Colorado. We're a few weeks behind schedule, so that should come in early August. We've got the PFS coming out at the Colorado and the FS coming out on Ana Paula. All of those, I think, can be chunky steps showing that the company is worth more. And then we've got kind of the sex appeal of these drill results. We've got drill rigs turning at the Colorado. We'll have them at San Augustine, and we've got them at Ana Paula. So we've kind of got this sort of sexy growth above and beyond big NAV steps and stability. if I think we've got some really, really cool deliverables over the next couple of months that can materially change our share price.
Well, you'll have to come back on a show to talk about those deliverables, Charles.
Thank you.
All right, I'm going to close it off. So, folks, I started by saying that I'm a big fan of junior gold miners these days because the first to move in a bull market are the majors, then the mid tiers, then the junior gold miners. And I'm specific about saying not all juniors are juniors to me. There's junior gold miners and there's juniors that are explorers, okay? But I like this junior gold to small mid-tier category because I think that they're the next to start moving in a significant way. And that's why I've been doing some of this homework that I talked to Charles about earlier, where I compare projects based on 100,000 ounces of gold production, because now you can start to visualize what does that mean for a junior gold miner. And the valuations that I'm seeing, and Charles even talked about how it's confirmed that, you produce 150,000 ounces of gold, you've got about a $1.5 billion valuation. And so you look outward a few years on Heliostar and their growth profile, and they get to that, 150, 200,000 ounce per year production a few years out. And I would argue that they're not even being valued properly today for the current price of gold. I think that a lot of these companies are being priced as if gold was much cheaper than it is now, and certainly not any look forward looking into where they're growing into. And the ultimate question to that is their skill to be able to grow into what they're talking about. And I think if you look at Heliostar over the last year or 2 years, as Charles has talked about, they've been delivering on what they're talking about doing. And they got the team to do that. And I really like their potential to grow into that 150, 200,000, and then beyond that, a kind of production. Ana Paula is a key asset to that. And that's something that uh, Charles was really firm about bringing to the forefront is that you can grow into a 150,000 ounce producer, but if you triple your share structure, the reward down the road is not going to be as big. And so they're using the foundation of this, let's say, small production to then build into bigger production and not having to dilute in a big way along the way. And so I think that puts them in a very small category, a very small group of companies for investors to look at that are of a like mind as me, that think this gold is going higher and that it's going to filter down to the junior gold miners that want to become mid tiers. And so, as always, my show is for information purposes only. Important for you to do your homework, speak with your financial advisors. But I really think you should do your homework, go to their website. And another thing I didn't even talk about with Charles, I think it's really impressive to me that they've taken the digital marketing bull by the horn. Not a lot of companies are doing that. But for example, just yesterday, I watched a video where Charles did a video where he talks about and put it out on digital media and talks about what this news means. Not many companies are doing that. So they really are firing on all cylinders, and they provide you with a tremendous amount of information in their corporate presentation and their news releases, in these videos, in these interviews that Charles is great about doing. And so do that homework, and I think you'll be equally as impressed as I am with the growth potential of Heliostar. Have a great day, and we'll talk to you soon.